Good morning. Okay, Josh FX Pro here, and today I want to bring to your notice or to your understanding about something I saw in the market. I've been seeing it over and over. I think I saw it in VIX 75 last week, and I saw it again while I was doing my back test this morning on the charts. So I want to bring to your understanding, to your notice, some particular kind of pattern, or rather a particular kind of pattern. It still it still coincides with our rule, right? Oh, it's still like, how do I put it? It's still, I think coincides is the word. Yeah, with our rule. It's still related to our rule, right? But um is kind of deeper in a more manipulative look, right? So you don't get to be wicked out, or you don't get to see the wrong thing when you're supposed to see the right thing. All right. So I'll show you this. So this is VIX 91X index. VIX 91X index. So yeah, this is the pair that I was referring to. So if you notice this pair, if you traded last week, this is a back test on last week, um, between 16th February, Monday, to today being 23rd February, Monday. All right. So if you notice one thing, you notice how markets at first I drew my line, my support resistance zones, right? And all the places, yeah, and all the places price could come back and have a test or retracement, right? So this is one of them. So at first, if you started this week, you would have noticed price was doing some kind of manipulation going on here, right? But then we've seen a break of the structure of the first high, going back to the retest point, because this is a break of a structure point, and it's going back to like retest, or this is kind of like a consolidation. No, it's like a flag. If you notice how market is a downtrend, this is it. It's a downtrend. So you notice how market flagged up to this area, right? So, but market has given you the first break of structure here, but it didn't go straight to that place. It made like a transitional, like a trending transitional push to that point, right? So if you look at it on 4 hours, remember our rule, one of the rules that we had is if market trends has a trending move back to the area of interest, right? Then you would want to wait to see market do uh, some break of structure. Like the market has to break a structure for you to get into the trade. That's how you confirm it, right? But in this case, it's kind of how would I put it? It's kind of interesting the way market played out in this particular case. It's kind of interesting because it made series of highs and break lows, like showing you it's going up, then showing you it's going down at the same time, still going back to show you it's going up. So a lot of manipulation has been placed. We are being placed, right? A lot of manipulation. Like for example, this was where market left. This was the swing low point, or where we have our trading range, the low of our trading range, right? On 4 hours, our trading range is between this point, because this is where we had the break of structure. So trading range is between this point and this point, right? But on daily is between this point and the one above. Yeah, here, right? So but on 4 hours, this is what we have. So I would explain this thing and show you what I see. So if you notice after market broke out from here, gave a high, this didn't come close, but finally the high was taken out from this one. So if it has gone straight from here upward, we would have assumed, okay, this is a straightaway trade. We don't have to wait for break of structure. But then Market didn't do that. What market did was it came back and broke the low of that point. So at this point, you may be thinking market have started selling. Then all of a sudden again, market did this. You get, so the longer move is not yet there. Market did this, breaking this structure again. You get breaking the structure again. Then at this point, you will say, okay, market is coming down, it's coming down. It gave you another high, breaking the structure again, like telling you at this point we've started an uptrend from here now because there's a high, there's a higher low, and there's a higher high. But at this point now, market shifted. It didn't get to our area of interest. Now, a lot of people might capitalize on maybe this other block here and say, okay, it's taking this other block and we are going. But on 4 hours, that's this on on daily, that's not what we're seeing. On daily, this was where we had the break. But on 4 hours, near the break of structure, even before the break, we had this other block and we had this imbalance area, this fair value gap area, right? So, but this point may be used as liquidity. This is why I always take the order block and fair value gap that is closest or before that is kind of before the break of structure points, because obviously most of the time market comes back to take out that break of structure points as liquidity. Most of the time or sometime it comes back. But then whatever I'm trading, whatever the the pair I'm trading, I'm always making sure, or the market I'm trading, I'm always making sure that the price gets to tap in on my where I'm going to put my area of interest, where I'm going to have interest in. It will be other blocks areas around the area of break of structure, right? So we had our 4 hours area here, which we had this fair value gap that was partially mitigated before now. And then we had the other block that is here. Okay. So, but market at this point didn't get there. So what market did next, market came and took out this low. So if you notice how market took out this low, now a lot of us will be waiting. Some people would have actually taken this trade and made some profit. I mean, when market comes back to tapping on this other block here, and maybe on a lower time frame, it's a big deal. And market moves, they would have made profit all the way to here. I mean, your 1:3, 1:2 would have been a bomber, right? It would have been a very good trade. Let me put this low that it broke here. So if you look at that point of break, this low, the point of break in a 1 hour time frame, you see how it looks like. You see how it looks like. So your order block area on 1 hour would have been probably here. But at this point, they are still manipulating the chart. You see how markets, after breaking this one, made a trend here. This is like a giveaway. You could take this and boom, you are out. Besides, this is perfect. Why I say this is perfect? The star is perfect. This last candle of the star closed below this low and this shadow low as well. So it's perfect to trade after tapping in, then close below the full low of the two candles before then. So it's perfect to take the trade. You could take this trade and you would have made, let's say, if you put your stop above here, you would have made easy 1:3, 1:4. Yeah. Or let's say you put your stop just at this point, just to be careful. You see? An easy 1:3 was made at this point, right? 1:2, 1:3. So you would have made profit if you had taken this one here. But this is not the ideal setup we were actually waiting for. This is not the ideal. I could tell you this over and over. This is not the ideal setup that we were actually waiting for. The ideal setup we're waiting for has to come to the other block of 4 hours or the fair value gap of 4 hours, which is close to the break of structure point. It's like what market does when it's doing a higher high, higher low setup. At least it's going to get to this break of structure point, at least, or somewhere below it. So this is what they call 50% retracement on Fibonacci, or deeper retracement on, if you're talking about smart money concept, right? Or deeper retracement, right? Before you go, but at least it should get to 50% of where you have your break of structure, right? It should get to around that area. It should get to around that area. So, but most times we also have shallow retracement where market doesn't get to that your point. For example, market is doing this, right? This is the break where you had your break. So market doesn't really get to here. Market reverses from this point, right? It happens that way as well. But most of the time when trading this and you want a more perfect move and a more perfect entry, you would have to wait for the concise direction or for the right direction to take the market. So if you notice, after market gave that break of that low, it kind of gave an entry here for those who would have taken this market. It kind of gave an entry here, breaking this low. So at this point now, after it broke this low, it has formed a low, right? It has formed a low. This is the low of the market now. It has formed a low on this market. And this low now will kind of tell you or tell us to buy the market, to sell the market, because then we have a break of structure. So if you're waiting for a retest, maybe you're waiting for a retest around this area or around, but you see how market kept going and kept going before it cleared off all these points. Because why? There's still a pending imbalance zone here, which market needed to come and cover up. There's still a pending imbalance area or zone here, which market needed to come back and at least cover up and mitigate fully, right? So we had two partial mitigation before, then we had a third partial mitigation. So you see, notice how market came and also broke the structure, but then it went straight to that place. So because it went straight, our rule is as long as we have market going straight to that place after the breaking the first structure, right? Going straight to that place without trending there, the first reversal candlestick pattern, see, you can take it and ride it back down. On 4 hours, this was the perfect reversal candlestick pattern with with two rejection candles. It went there, rejected, came back, went there again, rejected, came back. Then the third one just covered up. This is the pure evening star, just like what we saw on 1 hour on this point. So if you wanted to trade this pair too on 1 hour, you go down to a 1 hour time frame, and this would be what you would see. Now on a 1 hour time frame, this market went as far as here. So at this point, I would not say, because then if you look the move on the 1 hour, this first there was a trend, right? There was a trend here. Aside here, there was another trend here. There was a high here that was taken out, right? Yeah, there was a high here that was taken out. Aside that too, there was another high here that was taken out, because we have this low. I said I'll talk about trends, right? So what we need to do is we need to, when market gets to this point, we need to wait for a break of structure before we could take the market for a sell. Now, where is the break of structure? A lot of people would ask. Now, we had market do this. First time it came here, reversed. Second time it came here, gave this space. Third time it came back, reversed, right? Now, for me, I would consider this as a point in which it's reversed from there, because we had this bold candle, but then you can still consider on 1 hour, you can still consider this because a high has been created now. After this move consolidation here, this high was now created. A low created, a high created. So at this point, I would have considered taking the market from here. If I was following this market, this would have been a skeptical area to buy this, to sell this market from. So, but this would have been a more promising area to sell the market from, because I've seen the high that was created and I've seen how market engulfed that high or that point to close below. So my trade would have been from here. Now, this is the main trade that we're waiting for. So you know that market is going to actually fall. So you see how market fell up to, did it do 1:5? I'm trying to find out, guys. So up to today, which it gave 1:5.8. Yeah, 1:5.8. So once market do this pullback, I'll move my stop loss to this high. Then once I see this engulfing, I take more entries. Market goes further, and give this pullback or this pullback, I'll move my stop loss. When I see this pullback and it rejects from that point, I move my stop loss to the closest point, which is somewhere around here, right? And then let the markets keep going, keep firing down. So, or rather, once I move it here, I'll just let it be and focus on my targets. Probably once I see other confirm move, then I'll try to buy the highs, to sell the highs rather. Every high point that I see, like here, I'll sell. Here, I'll sell because I know overall this market is going for the dip. So probably before it to get to this 5.8, 1:5.8 risk to reward ratio, before it to get to here, I would have already stacked up more entries. I'm like 1:2, 1:3, and thereabout. So at the end of the day, I might make 1:, almost 10. Yeah, on this particular pair alone. So this is just to bring to your memory the manipulations market could make when it comes to this kind of thing. But we still stand our ground for our bias. Still stand our ground for our bias. It is still sure to be working, right? Our bias, our strategy is still sure to be working. So these are the things, this is why you do backtest, so that you get to understand what kind of market structure is being formed, what are the new market structures that are being formed, what are the new market conditions that move the market, what are the new ones, because market conditions do change over time. They actually don't remain the same. I talked about this in the earliest videos that I've posted in YouTube, on my YouTube channel. So I hope this helped you. You could go back and do your own back tests to understand what's going on here, right? But this is, for now, this is what I'm seeing, and I just thought to share with you. So you can always drop your comments. Tell me what you think about it. Like, subscribe, and turn on your bell notification so whenever I post a video again, you guys would see it. So for now, it's bye. Just FX Pro signing out.